All right, today we are diving deep into the very, very complicated relationship between two of the biggest names in tech, Nvidia and ARM. What seems like a straightforward headline about selling stock is, let me tell you, a whole story about massive strategy, power plays, and really the future of technology itself. So let's get right into it. So, this all kicked off with a pretty dry SEC filing back on February 18th, 2026. Nvidia, the AI chip giant, had sold all of its shares in ARM. And ARM is the company that designs the fundamental blueprint, the architecture, for pretty much every single smartphone on Earth. So on the surface, yeah, this looks like a huge breakup. And that, of course, brings us to the big question. Is this really it? Is this long, tangled romance between these two semiconductor titans finally, truly over? Well, like any good relationship drama, the answer is not quite what it looks like. To really get what's going on now, we've got to jump in the time machine and rewind a bit. See, this story doesn't actually start with a sale. It starts with a massive, audacious plan for a merger. You could almost call it a corporate engagement. And what an engagement it was going to be. We are talking about a mind-boggling $40 billion. That's the price Nvidia was ready to pay back in 2020 to just buy ARM from its owner at the time, SoftBank, a deal that would have completely redrawn the map for the entire industry. But oh boy, that walk down the aisle, it was never going to happen. The deal gets announced in 2020, and it immediately smacks into a giant wall of regulatory problems. Regulators in the US, the UK, Europe, they were all worried it would just give Nvidia way too much control. So by 2022, the deal was officially dead. Then a year later, ARM goes public in this massive IPO, which brings us to the news in 2026. Nvidia selling off the very stake it picked up during that IPO. Okay, so with the acquisition dead in the water, the whole relationship had to evolve, right? Nvidia couldn't be the owner anymore. So it went from being the suitor trying to buy the whole company to, well, something different, a strategic investor. And would you just look at who showed up to ARM's big IPO party in 2023? It was a literal who's who of the tech world. You've got Nvidia right there, shoulder to shoulder with Apple, Google, Samsung, TSMC, all of them buying up shares. It's like they might not be able to own the company, but they all wanted a piece, which just goes to show you how vital ARM's technology is to every single one of them. And we're not talking about some small, symbolic gesture here. Before they sold, Nvidia's stake in ARM was worth over $155 million. That is a serious chunk of cash. And it's that very stake that's at the heart of this whole breakup news today. And right here is where the story gets really interesting. This is the twist. Selling that $155 million stake, it doesn't actually mean what you think it means. Turns out the most important part of their relationship was never, ever about owning stock. And hey, you don't have to take my word for it. Just listen to what Nvidia's CEO Jensen Huang said back when the original deal collapsed. He made it perfectly clear. He said Nvidia's bond with ARM is a proud licensee for decades to come. And that phrase right there, proud licensee, that is everything. This really breaks it all down. On one side, you have what they gave up by selling their stock, right? A financial bet on ARM's success, a seat at the investors' table. But look at what they kept, a 20-year license to ARM's core tech. This isn't just some investment. This is the literal foundation that Nvidia uses to build some of its most important products. One is about money, sure. The other is about the very heart of their technology. So here's how that unbreakable tech bond actually works. It's really a simple three-step dance. First, ARM designs the blueprint, that core architecture for a chip. Second, Nvidia pays for a license to use that essential blueprint. And third, Nvidia takes that blueprint and builds absolute monster products with it, like its game-changing Grace CPUs. These are the chips that use ARM's designs to power the massive AI data centers of the future. See? Their destinies are completely tied together on a tech level. Okay, so let's zoom out a little. Why does this whole strategic shuffle actually matter? What does it really tell us about where the tech industry is headed? Well, first off, just look at ARM. Since that failed $40 billion acquisition, its market cap has just exploded to around $135 billion. ARM isn't just some company that makes parts anymore. It's an absolute powerhouse, and it's being fueled by this insane demand for AI. And that's because, well, everybody needs them. ARM is kind of like the master architect for the entire industry. I mean, the list of companies that depend on them is just staggering. Meta, Google, Amazon, Apple, and of course, Nvidia. ARM is basically the Switzerland of the chip world. They're this neutral, essential partner to absolutely everyone. And that's exactly why regulators were so nervous about one of its biggest customers, Nvidia, owning the whole thing. So the real key takeaway here is this idea you could call strategic decoupling. What Nvidia did wasn't a breakup, no way. It was a calculated move to separate its financial investment from its mission-critical technological partnership. They basically cashed in their financial chips while going all in on the technology license that actually powers their business. And all of this leaves us with a really fascinating question for the future, right? In this new age of AI, who's really holding the power? Is it the company like Nvidia that makes these incredibly powerful chips? Or is it the company like ARM, the one that designs the fundamental architecture that all those chips are even built on in the first place? Definitely something to think about. Thanks for joining me.